Good afternoon, everyone, and welcome to this Open to Export webinar from the Institute of Export and International Trade in partnership with Bibby Financial Services. And today we are looking at how businesses can ensure they get paid on time and in full when selling into overseas markets. My name is William Barnes-Graham, the Senior Content Editor at the Institute, and I will be your host for this afternoon. Now, exporting is great, but only if your business receives the profits that your ingenuity and hard work deserves. And international trade does come with myriad risks, ranging from currency fluctuations, payment not being received on time, to things going wrong in things like the delivery of your goods or services. To answer your questions on how to minimize these risks and to discuss some of the challenges faced by traders in the current climate, I'm delighted to welcome two fantastic speakers. Firstly, very delighted to introduce Yvonne Redel-Anderson from Bibby. Yvonne has over 30 years experience working in finance and international trade. She's helped shape the legal framework of global cross-border factoring and educated many of the next generation of international finance specialists. Good afternoon, Yvonne. How are you today?
Yeah, hi, Will. Thank you very much. I'm fine and dandy and glad to be here.
Excellent, excellent. Fine and dandy. I think I'll use that for myself as well. Fine and dandy indeed. And secondly, as ever, it is my pleasure to welcome Kevin Shakespeare, a regular on our webinar programme, the Director of Stakeholder Engagement at the Institute of Export and International Trade, Dean of the UK Customs Academy, a widely respected trader, trade advisor and presenter on all things international trade, including, of course, Brexit. Hi there, Kevin. How are you today?
Hi, Will. I'm good, thanks. Pleasure, and it's nice and sunny where I am at the moment.
Excellent stuff. It's sunny here as well in North London, but the clouds are slowly drifting in. Anyway, before we go into the presentations today, we're going to take a few opportunities to actually ask you a few questions, beginning with this one. Bear with me 1 second. So this question is asking to what extent your business has been affected by any of the following. So the options here, and you can choose more than one option here, include currency fluctuations, cash flow problems, bad debts, not being paid on time, and also there is a none of the above option. And very lucky if you're none of the above in this year of all years. Just while you are answering that question, just a couple of quick housekeeping notes. Firstly, you can contact me with any comments or questions using the question panel on the control window to the right-hand side of your screen. We are very much trying to view this as a Q&A today, so please do feel free to ask questions. Secondly, you will receive access to today's slide pack and a recording of today's webinar in a follow-up email we will be sending over the next day or so, hopefully before the end of this week. So please do try to listen in to today's presentations. Anyway, I should give you a few more seconds to answer this poll. So I'll do a 5-second countdown. 5, 4, 3, 2, 1. And just to share the results of the poll. So 55% have experienced not being paid on time, sadly, while 35% have experienced currency fluctuations in what has been a volatile year. Good news for 26% of you, just over a quarter, have managed to have a scot-free year so far. But yeah, still a fair few people experiencing cash flow problems and bad debts as well. I mean, at this moment, it's my pleasure to bring in Yvonne. Yvonne, any surprises in that those results there? To share the results.
No, actually, not at all. But hopefully we'll talk about some of these in the coming half an hour and see if we can't share some best practice.
Excellent, thank you. And well, I guess at this point I'll hand over.
Okay.
To you, Yvonne.
Thank you very much. If you move straight into the next slide, Will, because I'm aware that we've probably only got about 5 minutes, so I'll try not to speak too fast. Might be a good idea to start by just telling you where I come from. So I'll start by sharing with you who Bibby Financial Services are. We started back in 1982, part of the Bibby line group, a family-owned business which dates back to 1807. The group employs over 4,000 people in a range of sectors from retail, financial services, distribution, marine and infrastructure. Bibby Financial Services offer a range of open account receivables financing products, most commonly factoring and invoice discounting. How does it work? If I was to give you a quick rundown, the client invoices the debtor for goods sold. Client sends a copy of the invoice to the invoice financier. Service fee is deducted. The invoice financier typically gives the client up to 85% of the value of the invoice immediately. This is what we're doing in the export environment at BFS for the time being. The invoice financier can chase invoice payment from the debtor, or the client may opt to chase payment themselves. The debtor pays the invoice financier the amount on the invoice in full, either direct or into a trust account. And finally, the invoice financier then gives the client the remaining 15%. The next slide, Will, please. From our most recent client survey, our clients tell us that these are the key risks when selling goods or services outside of the UK. And if I highlight a few of these and the ones that I don't touch on, if you have any questions, ideally we can talk about those at the end. If I pick currency fluctuations first, at Bibby, we do have our own foreign exchange business, a foreign exchange currency and payment service. This is based in the UK for our exporters that need to make and/or receive payments in non-sterling currencies. And in order to compete with local competition, our clients are invoicing more and more, for example, in US dollars and euros. We would currently handle around 65 currencies, and this supports our exporting clients in protecting them created by FX volatility. The other one I'm going to pick out is access to cash and funding payment terms beyond the usual 30 days or 30 days end of month. Shipping goods from Southampton to Southeast Asia, for example, can take 3 weeks, more in the winter. Add in what might be the usual payment terms in a given market, and you can be looking at 90 days plus before you get paid. Yet your suppliers want paying in 45 days, or your contractors need paying weekly. Exporting places a strain on cash flow, for which invoice finance can be an ideal solution. Country risks alongside debtor risk. In more recent times, this has become more actual. Bad debts or payments delayed by foreign government intervention again put strain on liquidity that comes straight off the bottom line. We would encourage all of our exporting clients to either participate in our bad debt protection program or to have their own trade credit insurance policy that includes political or economic risk cover. Language barriers. Experience tells us that buyers and business owners can be well versed in English, yet back office and operational staff may not share that ability. The very people you need to speak to get paid. With every new overseas relationship, make sure that you know who to speak to and how to contact them before the invoice matures. Now, not listed here is an item which actually in itself demonstrates that all too many exporters do not think about their terms and conditions of sale, whether they are fit for export or whether the terms and conditions of purchase represented by their customers are practical. If you are not selling under the legal jurisdiction of the UK and a dispute arises, will you then have to enter into court proceedings under the applicable law of the importer? Think about, in non-COVID times anyway, flights, hotel costs. translators recognised by the court, documentation being translated into the local language. All of these costs come off the bottom line. So do ensure that your terms and contracts clearly demonstrate who's on the hook for what. The IOE offers terms and conditions of sale support, and be watchful that if you are selling under the buyer's contract, that you can meet all of their obligations. Unfortunately, time and time again, we engage with exporters who have no terms and conditions of sale at all, and so far they have just been very lucky. Next slide, please. This is what our exporters are talking to us about now, in the last month or two. Now, we know from the stats that are published that exports are down 9% on the same period last year, and because of COVID, hardly surprising. The biggest issues for our exporting clients by far, trade credit insurance limits to protect against bad debts are reducing, and this is despite the government's temporary guarantee scheme for insurers to bolster limits on buyers hit by the pandemic. And what we're finding is that where businesses have been allowed to extend the period of time when they publish, for example, if they're in the UK, their 2019 financials, where the underwriters are working with 2018 financials, if they're feeling that they are not strong enough from back in 2018, we're losing the bad debt protection limits, or our clients are losing those limits. And that's very topical at the moment. Getting paid is the other one. Back office staff working from home across the globe, getting hold of the right people to ensure you're in the next payment run, that's difficult. Not everybody has the sophisticated collection activity going on at home that they may have had when they had all their staff in the office. The closure of the hospitality industry across Europe. There are SMEs that support the hospitality industry, many of our clients, and we've found that they've had a particularly difficult time. Conversely, our clients selling online have seen major growth opportunities. This is absolutely booming at the moment, particularly in the clothing industry. And, not all bad, I guess, when you think that there is a trade surplus and that exports are still exceeding UK imports. Could I have the next slide, please? Thank you. Look, whoever you decide to work with, if you think about going for an invoice financing solution, our clients are made up of seasoned exporters, they're startups, they're single customer exporters. These businesses are selling to over 120 countries worldwide. So make sure that your financier can give you that kind of support. Our team in Banbury speak 15 languages to assist you in getting paid on time. Make sure that the financier you choose can support your collection activity. Look for protection from bad debt losses. We'll pay up to 85% of the value of the invoices assigned, easing the pressures of cash flow. Make sure that the financier you choose has the similar kind of appetite. And finally, we put our export team through IOE training regularly so that they can appreciate the issues and demands of exporting from the exporter's point of view, not just from a financier's point of view. And as I said in the beginning, if this very quick analogy has not answered your questions, then certainly I look forward to talking to you at the end. Thanks, Will.
Thank you, Yvonne. I'm just going to launch another quick poll. This time I'll be asking, just following on from that slide, which has been the bigger threat to your business this year? Has it been Brexit or has it been COVID? Obviously, I'm sure this answer would have changed throughout the year, but it'd be interesting to see where we are now. Yvonne, just a quick question. I mean, actually, because I think the connection dropped phase slightly for a second while you're talking about currencies. I was wondering if we could recap on the points you're making about currency. What are the ways companies mitigate currency fluctuation risks?
They can forward buy. So it may well be that you're selling in US dollars, paying your suppliers in US dollars, and have a use to keep US dollars. Or maybe you're invoicing more in sterling, but have a use for US dollars and need to buy. You can have a forward buy or sell contract. A lot of our clients operate on spot. We give preferable rates. I think they're considered to be very good rates throughout the FX industry. And certainly it's something that nearly all of our exporting clients are taking advantage of these days, most definitely, because if you're going to compete in the local marketplace, particularly if you're exporting now in those upcoming markets we're seeing, Southeast Asia, South America, parts of Africa, then invariably you're going to be looking to be selling in US dollars. And then obviously for those that are continuing to sell into Europe, euros, obviously very important.
Thank you, Yvonne. I hope that's helped everyone. So I'm just going to quickly close this poll and share the results. Unsurprisingly, COVID is very much the dominant threat this year, 69%. Before those 31%, Brexit, obviously that is a big issue as well, and we will come on to Brexit shortly in the questions, I believe. But if I hide that poll, and it's now my delight to hand over to Kevin for the next part of the presentation.
Thank you very much indeed, and can I thank Yvonne for that excellent presentation. And Yvonne mentioned some really relevant points there, and bear in mind that this is recorded, and do listen back to some of those points Yvonne made. There were some really good points there around contractual terms, around making sure you choose the right provider, and making sure what's best for your business. So some really excellent points. So do make sure everyone listens back to the recording as well. If we have a next slide, please. So what I'm going to do is just look at a few slides and just give a quick overview, and some of this might be some of these early slides might be fairly familiar and obvious, and I'll just focus on a sort of few points here. As always with international trade, there's different ways of obtaining finance, and it's too much to simplify it to say that small businesses, startup businesses, it's all money from your own sources and friends and family. It is in each circumstances, depending irrespective of what type of business you are, is to try and trying to have the most suitable finance available to yourself, to your business circumstances. So there will be some circumstances in which equity finance may be suitable for fast-growing companies in some sectors. There are, if you like, the more traditional forms of bank finance, but clearly, as Yvonne has very clearly articulated, there are also trade finance providers as well. And it's very important that businesses choose the provider that's best for them, based on their circumstances, but also use the financing instrument that's there. So export invoice finance, as Yvonne illustrated, is a very good example of that. If we have the next slide, please. So Yvonne alluded to this, is that there is a popularity around linking the finance to the actual export transaction, or another way of looking at it is the actual event, the event being the export finance. And also looking for this within the whole supply chain, so from the purchase side, the stock side, to the sales side. So it's important, just as when you manage your business, you look at it from the whole element, that you include that from a financial aspect, not just in how you manage the business and the financial accounts of your business. If we have a next slide, please. So just want to introduce a couple of slides here, and illustrate also the importance or potential importance of UK Export Finance, which is UK's export credit agency. So clearly a very important part, and they're very there to provide support when it's not fully available, and often offer guarantees to finance providers. So there is further information clearly on the UK Export Finance website. But it's important to recognise the role that you have to work with your finance provider, and equally to try and support your export trade. So that becomes very, very important, the role of UK Export Finance, the UK's export credit agency. If we have the next slide, please. So in my final slide, I just wanted to mention around a growth concept in terms of methods of settlement, methods of payment. So if you look around the world, there's clearly a number of different ways of getting paid, whether it's documentary letters of credit, standby letters of credit, open account trading, export credit insurance. So there's lots of different ways, and businesses should apply it applicable to their circumstances and their need. So it's only fair that we recognise the role of an escrow account potentially as a means of facilitating an export sale, and not just to the United States, for example. So under escrow, an exporter and importer agree to place funds with a trusted, and that keyword regulated third party. The third party whose money is placed with must be regulated by the Financial Contact Authority in the case of UK businesses. A third party then collects, holds and distributes funds under a specified set of conditions agreed by the exporter and importer. And that agreement becomes absolutely, those conditions become key and fundamental for both parties, the exporter and the importer. And that is sometimes referred to as an escrow agreement. So it's a very quick overview in terms of the slides I've gone through. But it's really just to re-emphasize important points and re-emphasize some of the great points that Yvonne mentioned earlier as well. And do take the opportunity to listen back to the recording in terms of some of those important points. So I'll pass back to Will now, and we'll very happily take questions. Thank you.
Thank you, Kevin. As well, another very useful presentation there. So thank you very much for your time. I hope everyone found that useful. Just a quick poll again, just while we kind of kick off the next part of the webinar, just a Q&A. This poll is asking if you have used any of the following to support your international growth. Options there: services or loans from a bank, export trade finance providers, UK export finance, government grants or schemes, or none of the above, which may be applicable to some of the newer people on the line. Kevin, just picking up on one of the last points you were making there around escrow, and Martin has asked, what are the pros and cons of using escrow against rather using something like letters of credit?
I think it's a good question. Probably one of the ways of looking at this is perhaps more which is the most suitable for your business. So clearly in any trade transaction, there's a negotiation to be made between buyer and seller. So documentary letters of credit have been around for a long time, and in certain countries and markets of the world, they're very, very well established. So so sometimes the overseas buyer will be familiar with documentary letters of credit, and for the overseas buyer, the ability to generate finance against it. So it really does come down to individual circumstances. I guess one thing where escrow potentially comes into play potentially well, but it can still apply for trading goods, is also trading services. So with a documentary letter of credit, it's difficult to actually, where you haven't got something physical, to actually apply that concept to a documentary letter of credit. It's possible, but it's harder because there isn't that physical movement, that trade documentation. So that's one element where escrow comes into account, that element of the intangible. So for example, the software sector. But really, it's more about determining what's best for your business, because there are different methods of payment, and yes, different countries probably have different conventions. So it's probably more around considering what is best for your business. Thank you.
Thank you, Kevin. And just to share with everyone the results of that poll. So a large number of you haven't used any of these services as of yet. This might be because you're on this call to find out more about them. But of those who have been able to answer, 20% have used banks, 24% government grants or schemes, 15% have used export trade finance or export or trade finance providers and 9% UK export finance. So hopefully we've been able to highlight some of the benefits of a couple of those services today. Onto the Q&A again. This one might be for Yvonne. Again, it's another comparison question. It comes from Jonathan, who asks, how does the cost of invoice financing compare with discounting a term, a letter of credit again?
Well, the cost of invoice finance depends on a range of considerations. So it's very difficult to stick one price on it. It depends on turnover. It depends on the type of facility, whether you're having a disclosed facility or an undisclosed facility, whether you're taking the bad debt protection or you have your own trade credit insurance, whether you're doing the collections yourselves or the invoice financier is doing the collections. So it's difficult to put a price on that. But obviously with an invoice finance facility, you do have that credit control function available to you, which is ongoing. With the cost of letter of credit, that's not my area of expertise because we don't deal in letters of credit. But obviously the difference is that it's a very secure method of payment, but it can be debilitating if you're working in a very competitive market, because more and more businesses want to do trade on open account terms where they can. So I don't know, maybe Kevin has an opinion on the cost of LCs more than I do, perhaps.
Yeah, I think just to add to that, I think as Yvonne said, there's variables to all costs. In the case of a letter of credit, it's if you're looking to discount under a letter of credit, it again will depend on various factors. So it will depend on the country risk, and that probably will be the single most important factor in terms of the cost. What is the perceived country risk of that the discounter is applying, and so will the discounter effectively get paid themselves? So country risk is the biggest factor. The issuing bank under letter of credit could be a factor as well. So there will be strong variables there depending on those circumstances.
Thank you, Yvonne and Kevin as well. I hope that's helped answer that question. Just a reminder, everyone, if you do have questions, please do feel free to ask them. That's the screenshot on the screen should show you how to do that. It's the control panel to the right-hand side of your screen. We do have a few minutes here to put your questions to the experts, so please do feel free to ask. A question here from Nick, who has asked, how effective is the European payment order as a tool to get paid? I'm not familiar with that myself, so Yvonne or Kevin, any takers on that question?
I'm happy to start. Oh, no,
yeah,
Yvonne, you go. Sorry.
No, carry on.
You sure? So again, I think I'm not sure if you're referring to there's a couple of things. So the single European payment area, SEPA. So there are schemes within that, including the likes of a direct debit scheme, a SEPA direct debit. Although that's probably slightly more applicable for the likes of subscription regular collections of money, isn't it? And it is an effective system. Then you have transfers of money, so you have the likes of the target system, for example. So it is fair to say that you look at the history of the European Union and where it's come from, that there has been some success in development of these systems. So I think there is a good element of effectiveness there. It is very much aimed towards more the electronic type payment. And it's probably fair to say awareness of it is stronger in certain European countries than others, but there has been some degree of success on the SEPA payment system.
Thank you, Kevin. Question here, I think, for Yvonne. It actually refers to terms and conditions, which you made the point about earlier, and it's from Sylvia, who's asking, in terms of terms and conditions, how do Incoterms factor into this? Is XWorks always the best one to use if you are an exporter? Yvonne, any thoughts on that?
Yeah, well, first of all, if you're an exporter, you wouldn't be using XWorks, but you could be using FCA, which does the same thing. Ex Works doesn't evidence that you are the exporter, and therefore theoretically makes it difficult for you to be in a VAT refund position, but you can use FCA. Obviously, that is at the, what I'd say, the cheaper end of the Incoterms, because you're making the goods available to your buyer very quickly, for example, at the factory gate. If you go to the other end, to DDP, for example, where you're required to deliver the goods, perhaps to the factory gate of your buyer, then that becomes more expensive for you, because you have to arrange shipping, you have to arrange the export, the import, insurance if the goods are going on the water. So there are lots of considerations with DDP, less considerations with FCA. So the cheaper option for the exporter is FCA.
Kevin, anything to add in terms of Incoterms? Any further suggestions?
No, I think Yvonne sort of covered it very well. There are, whilst for an exporter, Ex Works may be seen to be, if you like, the lightest touch option. There has various risks there, which I think Yvonne's articulated very well.
Great, thank you, Sylvia, for the question. I hope that's been helpful. We've had a few people ask kind of more generally around export finance and trade finance support, and saying, is it generally more available to larger organisations on larger contracts? Yvonne, what do you have to say to that? Is it more for larger companies? Or?
Absolutely not. As I said in my presentation, we have new startups, we have single debtor exporters, we have clients where the turnover might only be 500,000 or 300,000 in the first year. They might only be looking for, say, something between 50,000 and 100,000 as a funding line at any one time. So absolutely not. We cater very much for the SME and the smaller end of the SME market, as much as we do for clients that are seeking lines from us in excess of £1 million.
Thank you, Yvonne. I hope that's helped those questions there. We've had a question in from Dale, who's asked, with the government banking on businesses developing their export business going forwards, are we likely to see any government-backed low-rate finance in this area? I mean, I suppose we can't speculate too much, but I guess it'd be interesting to hear from you both actually around what is the kind of government support which is out there for exporters at the moment. Obviously, Kevin touched on UKEF. We had a couple of people ask around whether government is providing any export finance support, as part of its COVID support, for instance. So I'm just wondering if maybe Kevin or Yvonne, do you want to start?
Well, I was just going to say that, we have lots of clients that also have taken up the C bills and the B bills opportunity that was presented by the government through the banking system. So not directly from UKEF, but guaranteed by UKEF to the banks so that they can support their exporting clients.
And Kevin,
yeah.
I think again, it's well encapsulated, as you say, that there are other support mechanisms out there as well, and clearly some of those are COVID related. And I guess there's also the British Business Bank in certain senses as well. From an export perspective, or traditionally, I guess, outside of COVID, then UK Export Finance, but also to remember the key role played by the likes of the Department for International Trade and the Foreign and Commonwealth and Development Office as well, the FCDO, is that for businesses looking to export, some great support provided there by those types of organisations as well, government organisations, to help support UK exporters.
Thank you. I hope that's answered vast series of questions which are coming through. Just while I kind of get a sense of the next question to ask, because there's a fair few coming, I'm just going to launch another poll. This one is asking, how prepared do you feel for the end of transition? Options range from very prepared, quite prepared, not very prepared, not at all prepared, or not sure. So just while you were answering that question, we had a couple of people ask around kind of digital products in this space, the kind of digital export finance support mechanisms or tools or instruments. Kevin, do you have a sense of, I suppose this might include things like fintech, what's the latest in the kind of the technology aspect of trade finance and export finance?
Yeah, there's been a lot going on in that space in terms of obviously fintech, financial technology, and obviously use of blockchain as well. And there may be some sectors clearly that possibly lend itself more to that, e-commerce, for example. So it is important to note that there will be some digitals where there are monetary limits to the amount of finance available. What I would say for any business, if you're using that the principles of good financial principles, Yvonne mentioned it around having good financial accounts, still very much remain. So having a good quality product, having robust business planning, robust accounts are still very much there. Yes, there are digital platforms and electronic payment platforms we've seen that certainly can apply depending on certain types of businesses. Equally, some of the more traditional forms of methods of payment and finance still exist. And certainly for some of the traditional providers, they have to make sure they do their due diligence as well on the transaction with the likes of Know Your Customer and anti-money laundering as well. So it's fair to say if anyone is considering those forms of finance, be very much aware and make sure that the organisation you're dealing with is regulated by the likes of the Financial Conduct Authority. Thank you.
Thank you, Kevin. Just going to close that poll now and share the results. Quite encouraging in some ways, in that over 50% are either quite or very prepared, but obviously a lot of work to do still for around 39–40% of the audience today, 10% either not sure, maybe less affected, who knows. I mean, any advice from either of our speakers in terms of what companies can do to go from not very prepared to very prepared, for instance? Kevin, do you want to start on that?
So I guess for any business, and it's good to see quite prepared, 42% is, again, identifying before trying to maybe take on all the various and different points to consider from trading from 1st of January, is consider who your customers are, where your suppliers are, and then what are the potential key changes for that. So what is the nature of the product I'm providing? Will there be some elements of regulatory change, whether that's through the likes of CE marking for health and safety, whether that's through, for example, food labelling? What are the requirements for, first of all, for my specific product? And then if there is no trade deal, what are the tariffs related to that product, if there are any tariffs payable? And then so having done it from a product perspective and where your customers and suppliers are based, to think about obviously what's referred to as some of the customs changes, so the requirements for customs declaration and movement of goods. So working on both, ideally simultaneously, and looking at those issues. Clearly, it's easy for me to say at the Institute and at Open to Export and the UK Customs Academy, we produced an enormous amount of webinars, some specific to certain topics. So do listen to them, and we've tried to obviously explain them in ways that businesses can understand. But look at your product, look at your customer suppliers, and also at the same time look at changes to customs procedures and how you will service them. Thank you.
Thank you, Kevin. I think we've got time for one more question, and I'll put this to Yvonne. A few people picked up on your point earlier around country risk, and obviously, as the UK looks to expand to more and more markets, this may be something more companies need to think about. So here is a question from Johan. who asks, how do you actually go about assessing the risk of a non-familiar market, say somewhere like Bermuda, as the example your hand gives, before evaluating maybe your market entry strategy or kind of how you would mitigate payment risks in that market?
Yeah. Well, quite simply, if you're not already working with a trade credit insurer, the larger insurers such as EULA and Atradius have a lot of free market information that you can actually pick up from their websites. And, you know, that's where I'd start. You can go and have a look. They tell you about the economic climate of a range of global markets. They will tell you about collection complexity, how easy or difficult it is, the legal structure, whether that's simple, whether it's convoluted. So there's lots of information actually just by going and having a look at the information that the trade credit insurers make available to their clients and to the public at large. That's certainly where I'd start if I was looking at those markets, together with, of course, the DIT. They also have market information. So there are actually several places to go on the internet to find out about new markets, and you don't have to pay for it.
Excellent. Well, free information is always good. But at that point, I think it's time to wrap up. So thank you very much to both Kevin and Yvonne for the time today. Some really useful answers and presentations from earlier as well. So thank you both for the time, and I hope everyone has found that useful.
Thanks very much, Will.
Just before we go, sorry, thank you both. Just before we go, on this slide, you'll see that there's a webinar from the Trader Support Service next Wednesday about changes to VAT under the Northern Ireland Protocol. The Trader Support Service has been set up to support companies with the changes to Northern Ireland trade, which take effect on 1st January 2021. It is a free-to-use service which will provide a digital service to support declarations with support from customs experts and online guidance and training, including a series of webinars about the changes companies trading with Northern Ireland need to know. The webinar on changes to VAT as it applies in GB and I trade, that's next Wednesday at 3 p.m. You can find more information about TSS and this webinar program at www.tradersupportservice.co.uk, and we'll send you a link to the registration form for that webinar along with the recording from today's webinar before the end of this week. And finally, on the last slide, before we go, just a reminder that membership with the Institute gives you a range of benefits to deal with changes ahead. This includes access to our technical helpline, discounts on training, a wealth of online resources, a daily bulletin with all the key trade stories, continued professional development, industry recognition, and hopefully some point in the future, some networking events and celebratory events as well, we hope. So plenty to look forward to. To find out more about training and membership with the Institute, please do feel free to visit the site at export.org.uk or get in touch at institute@export.org.uk. But for now, thank you everyone for tuning in. We really do hope you found that session useful. The slightly shorter webinars are our way of trying to get more questions in. So we hope you've found the Q&A part of that useful. And please do let us know what you thought of it and suggest any future topics we could cover. But for now, goodbye everyone and stay safe.